All right, excelente. Bienvenidos todos a la clase de intro. Van a aprender lo que es un gamma squeeze y tenemos un invitado especial de Spot Gamma que va a estar dando la sesión, la parte de Spot Gamma. Así que bienvenidos todos a la clase intro. All right, vamos a empezar en unos 2 minutitos. Bienvenidos todos a la clase introductoria de Bolsa de Valores. Empezar en un minuto. All right, bienvenidos a la clase intro. Vamos a empezar 2 minutos. Escriban de dónde nos están escuchando. All right. Vamos a empezar. Tenemos aquí. Ok. Vamos a hoy introducir sobre Gamma, right? Y tenemos invitado de spotgamma.com que va a dar una sesión de lo que es Gamma. Así que bienvenidos a todos. Muy buen día ahí, Adi. Hola, Eric. Bienvenidos. Ok, estamos aquí en vivo en YouTube, que nos pueden seguir también en Facebook. Y vamos a introducir, vamos a empezar en un minutito. Buen día ahí, Javier. Bienvenidos todos a la clase intro. All right, vamos a empezar en un minuto. All right. All right, así que bienvenidos a la clase intro de Bolsa de Valores. Mi nombre es Vicente Luz, soy director de Wall Street Trading Institute. Llevo más de 20 años enseñando a personas alrededor del mundo a cómo invertir en los mercados financieros. Llevamos 18 años enseñando a personas. Somos una compañía de educación. Te vamos a enseñar cómo puedes pertenecer a parte de nuestro curso y entrenarte sobre la bolsa de valores. Somos una compañía 100% de educación. Te vamos a enseñar todo sobre la bolsa de valores desde cero. Así que nosotros hoy vamos a aprender cómo funciona la bolsa, por qué es el mejor negocio que existe, cómo escoger un corredor, cómo emitir una orden. Y de ahí van a aprender una de las cosas más poderosas que es gamma, right? Cómo el mercado de opciones impacta al mercado de opciones. Y tenemos al fundador de Spot Gamma que está en el webinar, nos va a enseñar la poderosa herramienta que pueden utilizar para encontrar estos señales de gamma, right? Porque el mercado de opciones ahora negocia más en términos de volumen que las acciones y impacta lo que hace el precio de la acción. Y muchos, 99% de los traders no miran a esto. Poquitas personas enseñan sobre gamma. Right? Es uno de los filtros más poderosos que hay. Así que siempre digo, la diferencia entre el éxito y el fracaso es la educación, el conocimiento. Mientras más aprendes, por ejemplo, solo sobre esto gamma, aprendes esto, cómo puede aumentar tus transacciones. Esta mañana dio una enorme alert el gamma en GameStop y hemos visto una movida casi de $15 desde que alertó. Así que el conocimiento, saber qué buscar, te da ganancias. Y es lo que el 99% de los traders hacen, no se educan en los mercados. Como dice Warren Buffett, mientras más aprendes, más ganas. Si quieres aprender, si quieres ganar dinero, tu primer paso es aprender y cambiar los hábitos, right? Si sigues haciendo lo que haces, continuar recibiendo lo que recibes. Así que nuestro método de enseñanza se llama el Professional Traders Package, que es como aprender a volar un avión. Si lo tratas de hacer solo, muy probable es estrellas el avión. Nuestras clases son ilimitadas, ¿ok? Y eso es muy importante. 99% de los institutos te dan 2 días de clase, 4 días de entrenamiento. No vas a convertirte en un trader profesional en 2 días. Si quieres tener éxito, tienes que educarte continuamente. Nuestro próximo intensivo es este mismo viernes y sábado. Vamos a estar en vivo en Miami. Todas nuestras clases las hacemos en vivo y las transmitimos para nuestros estudiantes en más de 53 países. Así que lo puedes ver desde cualquier parte del mundo. Y no vas a tener acceso solo a estos 2 días. Vas a tener acceso ilimitado a nuestros entrenamientos. Y tienes acceso al club de bolsa, donde todos los días vemos oportunidades en el mercado y te alertamos las mejores transacciones. Así que tienen el entrenamiento 27, 28 y de ahí todos los meses tenemos estos 2 días de entrenamiento. Estos también quedan grabados, que lo puedes ver en cualquier momento. Tenemos miles de horas de entrenamientos grabados donde en cuanto te inscribas consiste. También vas a tener el Consistent Trader software y las alertas que te encuentran las mejores oportunidades, los mejores puntos. Por ejemplo, aquí detectó este punto de entrada, ¿ok? Y $6,000 se convirtieron en más de $83,000 en cuando ocurre ciertas condiciones. También te vamos a dar acceso a nuestros Opening Bell Alerts cuando vemos oportunidades en la apertura y los Dark Pool Alerts cuando vemos compras de los fondos de inversiones, que hoy hemos visto bastante actividad, y van a tener acceso a nuestro Seasonality Trader Software. Así que incluye nuestro programa. No hay un programa más completo en el planeta donde tienes las clases ilimitadas, normalmente solo por las clases $2,995, los intensivos por vida, no por un mes, no por 2 meses, no por un año, acceso por vida, $4,995, las alertas de Consistent Trader y el software con la data por vida. Así que vas a tener la herramienta que escanea 14 diferentes acciones. Tú no vas a tener que buscar entre 40,000 acciones. El software ya te va a decir cuáles son las que tienen oportunidades ahora mismo. El club de bolsa de valores, que vemos transacciones juntos todos los días, y el Seasonality Trader, con un valor de más de $2,500 solo por el software, que encuentra las mejores oportunidades. Así que un valor más de $20,000 tienen la promoción, $2,495 acceso por vida. Okay, así que pueden ir ahí a aprendabolsa.com, inscribirse para ya hoy mismo, right? Si van aquí a aprendabolsa.com, pueden poner su email, tarjeta de crédito y tienen la membresía por vida. ¿Ok? Los que tomen acción hoy y se inscriben hoy mismo, siempre me gusta beneficiar a la gente que toma decisión, ¿ok? Y solo va a estar disponible para los que entren hoy. Van a tener nuestro Crypto Bot Masterclass este sábado, que normalmente tiene un valor de $3,495 incluido, ¿ok? Que te va a decir un sistema de cripto que compra y vende automático. Te hacen cientos de transacciones al día, ¿ok? Donde puedes empezar a ganar dinero en microfluctuaciones en el mercado de cripto. También te vamos a dar nuestro curso de Sharelord incluido y las alertas, que alertamos 52 alertas todos los años de las mejores acciones que puedes rentar y hasta que puedes lograr que te paguen por comprar las acciones. Y te vamos a dar nuestro curso de Forex incluido, un valor de más de $10,000 entre estos 3 cursos adicionales. Lo van a tener incluido a los que tomen acción hoy y entren en nuestro programa. Como digo, el único riesgo que tienen es no tomarlo. Si quieren aprender, estamos hablando de $2,500 por el resto de tu vida de entrenamiento. Una transacción que hagan, pueden recuperar el costo de la educación. Así que el único riesgo que tienen es no aprender sobre este mundo maravilloso. Así que cualquier pregunta, dudas que tengan, muchos de nuestros estudiantes, este estudiante en 5 transacciones ganó casi el triple de lo que cuesta el curso. Okay. Y hemos tenido miles y miles de testimonios de trades. Así que si quieren aprender, pueden ir a aprendabolsa.com. Esto toma meses de aprendizaje, no lo van a aprender en un día. El que te diga que lo vas a aprender en 2 días o un fin de semana, te está mintiendo. Esto toma práctica, okay. Toma educación. Hay tanta información que te vamos a dar, okay. Sobre, te ahorramos 20 años de aprendizaje de lo que a mí me tomó. Y sigo aprendiendo. Yo llevo 20 años y sigo aprendiendo. Lo van a aprender en menos tiempo. Unos meses de aprendizaje te puede dar una vida de libertad. Así que, ¿qué necesitas para invertir en la bolsa? Una computadora con acceso a internet, un poco de capital. ¿Cuánto pueden empezar? Yo digo con $500. No hay un mínimo, pero por lo menos para que te valga la pena y generar suficiente en las acciones de $500 a $1,000. Necesitas un corredor de bolsa para emitir las órdenes, gráficos y una estrategia. Por ejemplo, hoy van a ver cómo poder usar Gamma para mejorar sus transacciones. Así que este es el mejor negocio del mundo. No necesitas inventario, no hay cuentas por cobrar. Puedes ganar en economías buenas, puedes ganar en economías malas. Te vamos a enseñar en el curso estrategias para ganar cuando la acción cae. Igual cómo ganar cuando la acción sube en valor. Y aquí me pueden ver, he puesto transacciones todas partes del mundo, en Londres, Alaska, Islandia, New York, Miami, en cualquier parte del planeta. Okay. Lo más beneficioso de este mercado es que puedes trabajar desde cualquier parte del mundo. No tanto el dinero que te da, es la libertad que te da. ¿Y qué es lo que compramos y vendemos? Acciones. Las acciones se mueven todos los días a la alza o a la baja por oferta y demanda. Y lo que está pasando en el mercado de options, que van a aprender hoy, impacta lo que hacen las acciones. Impacta la demanda. ¿Okay? Y las compras y ventas se hacen en la bolsa de valores, a donde cada acción tiene un especialista que le está comprando a todo el mundo y le está vendiendo a todo el mundo. ¿Y qué es un broker? Es el broker. Tú vas a abrir una cuenta con un broker donde puedes emitir las órdenes, comprar y vender. Tú tomas las decisiones. Lo más bonito es que no vas a depender de nadie. Tú vas a tener el conocimiento, ¿right? Porque te vamos a dar todo ese conocimiento en el curso, donde no vas a depender de nadie para tomar tus decisiones. Tú vas a saber cuándo comprar, cuándo vender. No vas a tener que darle a nadie para administrar tu dinero. ¿Okay? Y puedes entrar a cualquier plataforma, emites la orden y en minutos te llega la confirmación. ¿Okay? Así que aquí los brokers solo te cobran una pequeña comisión cada transacción. Aquí hay una lista de brokers. Por ejemplo, pueden ir aquí a Stockbrokers diagonal, compare, ahí pueden ver una lista de corredores. Casi todos los brokers te dan una cuenta de práctica o real, donde puedes emitir tus órdenes. Y para abrir una cuenta es muy simple, puede ser de cualquier parte del mundo, right? De Estados Unidos, de Centroamérica, Sudamérica. Como digo, tenemos estudiantes en más de 53 países. Y solo tienes que tener un documento de identidad, right? Obviamente ser mayor de edad, 18 años. Ok, un recibo de luz, agua, teléfono. Ya puedes abrir tu cuenta y empezar a negociar en la bolsa de valores. Vas a poder negociar las acciones más grandes del mundo, como New York Stock Exchange, el Nasdaq, el American Stock Exchange. El Nasdaq negocia empresas como Amazon, Google, Apple, Netflix. En el New York Stock Exchange vas a poder negociar empresas como Bank of America, Disney World, IBM. Y en los mercados secundarios, como el American Stock Exchange, vas a poder negociar más de 800 empresas, incluyendo muchos de los ETFs. Okay, hasta compañías extranjeras como Toyota, Nokia, Vimpel. Puedes negociar como un ADR, lo que se llama un American Depository Receipt, en la bolsa de valores. Cada acción tiene un símbolo, ¿ok? Y tú puedes ver los gráficos, ¿ok? Por ejemplo, en TradingView, investing.com, vas a poder ver gráficos de velas japonesas. La vela te dice a dónde abrió y a dónde cerró. Así que, por ejemplo, si la acción abrió a las 9:30 de la mañana, ¿y a qué precio cierra? Y igual, si bajó, te va a decir a dónde abrió. Por ejemplo, a $10, abrió a 5 y subió a 10. Esta vela se rellena en verde. Así que te está diciendo la señal. O al revés, si abrió a 10 y bajó a 5, esta vela se rellena en rojo. Así que si vemos el gráfico, ¿ok? Por ejemplo, aquí estamos viendo gráfico y esto es un patrón que se forma constante, que en el Masterclass van a aprender patrones que estamos viendo en los bonos del gobierno, que muchos no vigilan TLT. Y esto hace inverso a las tasas de intereses. Así que más ahora con toda la visión en lo que está haciendo la Reserva Federal, ¿ok? Cuando esto sube, quiere decir que las tasas de intereses están yendo a la baja. Así que eso va a impactar a lo que hace el SPY y todas las acciones en el SPY, right? Como Amazon, que tienen que vigilar los próximos días. Netflix, Google, Apple. Okay. Por ejemplo, miren esta, GameStop, right? Mega movida, y esta es la herramienta que van a aprender. Y el software ya te lo había escaneado aquí, que estaba entrando enorme dinero en GameStop y tuvo una muy bonita movida de 90 a $107. Así que esto es uno para estar vigilando. Que ya en el mismo día podemos tomar una bonita transacción. Vimos Oxy hace unos días y nos dio más de 100% desde el lunes, igual que Apple, sabiendo el momento de comprar y vender, porque con movidas pequeñas la puedes amplificar en el mercado de opciones. Okay. Así que esto es una poderosa herramienta, se llama Spot Gamma, que puedes ver qué están haciendo los grandes, dónde está colocado el dinero, en qué niveles. Okay. Y tenemos al invitado, puede traer al fundador, el gran privilegio de tenerlo hoy, a Brent, el fundador de Spot Gamma, que va a enseñar lo que es Gamma. Así que aprovechen, right? Tienen al fundador de una de las herramientas más poderosas que puede lograr traerlo. Okay. Así que, y también va a estar dando unos tips privados a los que entren en el Masterclass de este viernes y sábado. Recuerden que este viernes y sábado, okay, tenemos el Masterclass. Él va a estar el viernes. Pueden ir ahí a aprendabolsa.com, inscribirse. Así que para coger el promo de la clase, van a aprender cómo leer order flow, cómo encontrar trades todos los días. Así que voy a pasar aquí a Brent. Le voy a hacer host. Welcome, Brent. Can you hear me?
Yeah. Hello, how are you doing?
I have the honor of having Brent here, the founder of Spot Gamma. He's going to teach you the powerful tool on how to use Gamma in the markets. So let me just hand over the controls to.
Okay. Thank you very much, Vincent. And I apologize for doing my presentation in English. My Spanish is not quite up to talking about options Greeks, so I apologize for that.
No worries. Yeah, well, they'll understand. A lot of them speak English too, so it's an honor to have you here in the webinar.
Thank you very much. Can you see my screen okay?
Yes, I can see your screen perfect, Brent.
Okay, great. So today what we're going to do is we're going to try to highlight how options trading can impact the underlying stocks. And regardless of if you trade options or not, we think this information is valuable. We have many people who follow our data and information just because they are futures traders. Maybe they trade the E-mini futures, or they trade spiders, or the QQQ, or single stocks. And so what our goal here is to show how options flow, or options trades that are taking place could impact stocks that you may be trading. If you have any questions, please feel free to put them in the chat, and I will try to answer some of them as I go along. So this is a great quote from a person named Steve Sosnick, who's a chief strategist at Interactive Brokers. Many of you may be familiar with their trading platform. And he says, if you are betting on sports, the amount of people on one side of the bet or the other can influence the odds, but not the outcome. However, in the case of options, it can actually change the outcome. And the idea here is that as options trades enter the market, on the other side of those options trades are dealers and market makers, right? Firms like Citadel, you may have heard of them, and they need to hedge. They need to hedge the risk, right, of buying and selling large amounts of options, and it's that hedging flow which we're going to describe today and discuss how it may impact the market. So there are two different ways that we look at the market. One is, what are the hedging flows associated with existing options positions? So if you're familiar with the term open interest, as all of you know, there's open interest for each available option for a given stock, say Apple or Tesla. There are a bunch of strikes, and there are calls and puts that are positioned for each of those names. So part of what we do, and this refers or pertains to what's called gamma hedging, we look at open interest data and we forecast how options market makers may need to hedge that existing open interest position. And then the second type of flow that we monitor is called delta hedging. And for this, we have a tool called Hero. And delta hedging applies to reading the real-time trades that are coming in and out of the market. So again, gamma pertains a little bit more to open interest and how, say, dealers need to hedge start-of-day positions. And then the delta hedging applies a little bit more to the activity that's coming into the market now. Just to give you an example, there is a lot of call buying taking place this afternoon in GameStop. I think you saw a very brief snapshot of that on Vincent's screen. And the general idea there is, as a lot of people come in and start buying calls, that market makers who are on the other side of those calls, right? Market makers are selling the calls that all of you traders are buying. And if you're short a call and the market is going up or the stock is going up, that's a bad position, right? So the way that you would hedge would be to buy stock, and we see those types of plays in a situation here like AMC and GameStop where the stocks are up quite significantly. So what I like to do is, a lot of people from a high level perspective think that maybe the options expirations or big options positions can't impact the market, and so I like to show this chart. This chart goes back to December of 2018, and what I've done is I've highlighted some major moments in the market in red. And what's interesting about these red lines is they all coincide with an options expiration. Now, there's an options expiration every month, and now actually there's an expiration every 5 days. But the larger expirations are the third Friday of every month. And then on the quarterly, so that's March, June, September, and December, those quarterly expirations are very large. That's where large institutions like, say, Bridgewater would position themselves and hedge themselves. And so what you may note on this chart is that in December of 2018, I don't know how many of you are familiar with this, there was a major sell-off in markets, right, in the back half or the later months of 2018. And there was this famous phone call on Christmas Eve day where Mnuchin, who was the Treasury Secretary at the time, was calling around all of the banks in the United States and making sure that they had enough basically capital and trying to sort of support the market. And people thought that was a major reason for the bounce. But the interesting thing about the Christmas Eve day and the low in the market was that was the day after a very large options expiration. A lot of put options expired the day before, so that would be the Friday before that Monday low. Fast forward to the March of 2020 COVID crash. Same situation. The red line is options expiration. The Monday after was the low in the market. Again, third Friday of March. Forward ahead here in mid-September, you can see again major low put in after the NASDAQ whale and splits in Apple and Tesla. Those stocks split in August, and there was a big sell-off, about a 10% move down in the market. And the third Friday of September, again, a quarterly options expiration was the low in the market. Another point here, if you all remember back to January of 2021, it was GameStop and meme stock mania, right? Well, Melvin Capital actually went down the day after options expiration, Friday options expiration. And a lot of people didn't think much about that January options expiration, but if we sort of just jump ahead to this past January, we had a similar expiration in size where there was giant, deep in the money call positions that expired, and I'll cover why those are important. But that led to a lot of volatility. Again, the low for January was the Monday after options expiration. So you can see these events take place time after time after time, and again, it's not all options expiration, but it's where there are very big positions. And something I'll note for you all to consider here looking forward, we have very large options expirations again in June of next month. So June 15th, there's a very large VIX expiration, and that is followed by the FOMC, which is where the Fed obviously changes interest rate policies, and then a very large options expiration on the 17th. So mark that date in your calendar as a very important options period. So let's talk about gamma and sort of how it can affect day-to-day trading. Many of you may have heard of these concepts of positive and negative gamma, and the chart that we're looking at here on the x-axis is our measurement of what we call dealer gamma in the S&P 500. So what we do is we look at all of the open interest in the S&P 500, and we estimate the amount of gamma hedging that would be required by market makers and dealers. Now, you can derive the figure gamma through a very common options model, such as the Black-Scholes, for example. So what you can basically do is you can plug in open interest and some strike information, and these Black-Scholes models will spit out a figure like gamma or delta or vega. So it turns out that when we measure gamma and we add the gamma up for all of the S&P 500, you can see that's on this axis. What you'll note is that on the y-axis is the one-day forward return. So that's what happens the next day in the S&P 500. And you can see that there are down to negative 10% all the way up to positive 7.5%. And what you'll note here is that when we have a very positive gamma environment, when there's a lot of positive gamma, the volatility in the market is very small. So you'll note that these scatter plots are very tight. They're very close to one another. And the returns of the S&P tends to be within, say, 1% plus or minus, right? And as we get into a more negative gamma environment, you'll note that the volatility, right, the distribution or the space between the day's returns are much, much wider. There's a lot more volatility in the market when we have a negative gamma position. So what's so fascinating about this is that these positive gamma environments are times where there are a lot of call positions in the market. Think about most of the period last year, very big call positions. Conversely, this year, for example, we have very large put positions and hardly any call positions. So we're in a very negative gamma environment, and you can think and realize that, hey, look how much volatility there is in the market over the past several months. It's much higher volatility than we've experienced in prior years. So the way that we plot this out on a daily basis is, if you look at where the S&P 500 is trading right now, it's trading roughly around 4,000. So this chart is from May 23rd. But as options expire and as positions change, the gamma in the market shifts along with that, right? And the hedging requirements from market makers and dealers shifts accordingly. And that can impact, again, the amount of volatility in the market, right? If I had +1 gamma index today and a negative one gamma index tomorrow, well, then the amount of volatility in the market, that may signal that there's a lot more volatility in the market. So what we do is we model this every day. And if you look here, you can see at the 4,000 level, we have approximately 600 million notional of negative gamma in the market. So that means that dealers in theory have $600 million to hedge for every 1% move in the market. And the way that they would hedge this, I'll talk about in a second, but essentially as the market goes down, dealers would be shorting stock, and as the market goes up, they'd be buying stock back. And so that is what expands volatility. But what you can see is that as you model volatility at higher strikes, you can see that the gamma number shifts more positive. And that's because there are more call positions up above 4,200 and 4,400. And so there is more positive gamma. And more positive gamma, again, means lower volatility. So we can model out what may happen, how much volatility will be in the market based on how much gamma is in the market. So let's talk a little bit about the hedging process and how it may influence price. Over here on the left column, if you are a trader, we're all traders here, right? And we're going to buy and sell an option through our broker's platform, right? Be it Robinhood or Interactive Brokers or E-Trade or TradeStation, whatever it may be. When we buy a call, the dealer, right, a market maker or a dealer sells us the call, and so they are short that call option. The way that they would hedge themselves, if you're obviously short a call, right, and the market goes up, you're going to lose money, right? You and I bought the call. We're happy that the stock goes up, but the dealer is obviously on the other side of the position. So the way that they hedge themselves is that they buy stock, and this is called the Delta Hedge, right? And the Delta is something, again, that comes out of a basic model like a Black and Scholes model. You can Google that. And then the way that they would continue to hedge themselves is that as the stock continues to go higher, they would keep buying more shares of stock. And if the stock starts to sell off, they would then sell shares of stock. If you think about it this way, if you only have one call option, and the more the stock goes up, the more that call option, the higher the value of that call option. So in this case, if you're a dealer and the stock is going up, the call option gaining in value is hurting you, right? And so you need to buy more shares of stock to maintain your hedge. So basically what you're doing as a dealer in that situation is you're chasing the stock, right? You're buying as the stock goes up and you're selling as the stock goes down. Now, obviously, you can break down the table here and see the other equivalent hedges, right? Based on whether someone's selling a call or buying a put. And the key takeaway here is that you'll note that when somebody sells a call or they sell a put, the dealer in that case is buying that position from them, right? And that's what we call a positive gamma position. And so there's a switch here. You'll note that if you sell a call, if the dealer is short a call or short a put, they are what's called a short gamma position, and that is where they need to chase the stock. That is the position where they need to sell if the stock goes down and buy if the stock goes up. Now, if they buy the call or buy the put, they're what's called a positive gamma position. So in this case, if a dealer is long a call option and if the stock starts to go up, they will actually start to sell stock as a hedge. So if you think about the way that this works and you think back to this original chart here, if dealers are long call options, right, as the stock market is going up, they're selling futures against that position, and that suppresses the amount or how fast the market may go up, right? Because the more calls are valued, the higher the value of calls, the more futures in theory need to be sold. And conversely, as the market comes down, dealers and market makers need to buy back futures, right? It's the positive gamma trade, and that is what suppresses volatility. Now, conversely, in this situation, in a negative gamma environment, when dealers are short puts, if the market starts to go down and you are short a put, you need to sell futures to hedge yourself, right? You can't sit there with a short put position on and let the market go down. So what do? You sell futures as the market goes down. And conversely, if the market starts to rally, you need to buy some of those short futures back. Because if the market starts to rally and you're just holding a whole bunch of short futures or if you're holding a whole bunch of short futures or a lot of short stock positions, as the market rallies, you're really going to get hurt, right? So you need to constantly adjust your hedge position. So we saw this play out in many key situations. You know, obviously in January 2021 was the highlight of this, where everyone came to understand what a gamma squeeze is. And the factors at play there, right? We're all probably familiar with this term. And the idea with the gamma squeeze is that as traders come into the market and they buy calls, dealers who are, again, short calls, right? So if traders are buying calls in GameStop or AMC, dealers are short calls, they need to continuously buy shares of stock, right? So that's the active hedge, the intraday hedge that takes place. Now, if there are already a lot of call open interest in the market, right, at higher strikes, as the stock is going higher, those calls are also gaining in value. So the dealers have to buy even more shares. So there's the initial hedge, right? When we all come in and buy stock right now, if we all go buy GameStop, dealers are going to sell calls to us. They have to immediately buy shares of stock as a hedge. That's going to be called the Delta Hedge. And then as the stock goes higher, well, there is all this open interest that they need to tend to, right? And this is where gamma comes into play. It's the change in value of existing options positions that means that dealers have to buy even more shares of stock. That's the gamma squeeze component. So we designed a system called Hero, and again, the differentiation here is when you're talking about gamma, you're generally talking about the existing open interest positions in the market. And then if we're going to talk about delta hedging, we're talking about new options flow that comes into the market. And so Hero is a delta-based signal, whereas most of the other work and most of probably what you are familiar with is a gamma-based discussion or gamma-based signal. So if you're an active day trader, you probably care arguably a little bit more about watching Delta trade as opposed to Gamma. So here's our intraday dashboard, and we're going to dig into some of the mechanics behind here. But basically what we show here is how the delta of calls and puts are trading in real time. So in this case, you can see for this stock, this is spiders, obviously, that if people are buying call options, that is a positive delta trade, right? That means that dealers may in turn need to buy shares of stock, and that's what this orange line moving higher indicates. And conversely, if this blue line, which is the put delta, real-time put delta on the day, if this is going higher, this is telling us that market participants are selling puts. And so you can see that as you watch the real-time order flow come in, it could have a fairly significant impact on the stock. I'll show you the GameStop chart from today, the real-time chart. It's really quite interesting. So let's break down how these delta hedging flows work. There are two categories of options trades for purpose of our discussion here. There are very large orders, which are generally over $100,000 in premium. And then there's a lot of small orders, which are under usually $100,000 premium. Typically, these are even just maybe $1,000 or $2,000. Those are generally small orders, are from people maybe like me and a lot of your accounts where you're willing to put up a few $100s or a few $1,000s even on a call or put position, but generally you're not trying to trade $100,000 in premium. And we break this down for one reason. Large orders, typically when you get into the millions of dollars on a call or put option, they're done through a broker typically. So you wouldn't necessarily try to go electronically buy, say, a $2 million call position through your E-Trade or Tasty Trade account, right? You would most likely call up a desk, call up a dealer, so JP Morgan or something like that, and say, hey, can you give me a price on, in this case, $100,000 or 10,000 March AMC calls? And the broker is going to make you a market, right? They're going to say, okay, I'll sell you those. And in that case, the broker, the bank trader, takes on that risk, right? And then the bank trader is going to need to hedge himself. So what exactly happens there when that trade takes place? As you all know here, Gordon Gekko buys 10,000 AMC calls, and the dealer has said, okay, great, I'm going to sell you those calls at $10. So the broker is now short 10,000 calls, right? And they need to hedge out their position. So what do? The first thing they do is they figure out what their delta is. And what delta is important is because it tells you how many shares of stock you need to buy at this moment to hedge out your directional risk. Right? If you're a market maker or a dealer, you don't want to necessarily take directional risk on a trade. You're not here to bet if AMC is going to go up or going to go down. You want to isolate that risk. And so you do that through delta. And this is, again, basic math that a calculator like Black-Scholes would help you out with. But in this case, we say, okay, if these calls are 50 delta calls, that dealer would need to buy 500,000 shares of AMC, and they would buy it very quickly, right? They don't want to take the risk of waiting, because if the stock starts to move, they could make or lose a bunch of money. And again, they're not in the business of making bets. So there are a variety of other things they can do here, which are maybe a little too complex for this discussion. But the point here is that, again, you can see how many shares of stock are required to buy for a given AMC trade. And you can start to see how these share amounts that need to be bought and sold can be quite substantial. Now, step two is, if you look at in our hero system where these big trades would take place, in this case, you can see that this gold line jumps quite higher. This was an actual order in Las Vegas Sands, and this is a call trade. So clearly somebody called a broker, and we know it's a broker because this trade hits at once. It's just one very large trade. If you were going to electronically trade this, you would see a different impact, and I'll show you that in a minute. But basically what you need to know here is that clearly a very large trade was put up, about $20 million in hedge impact, and then the dealer would be short these calls and then need to adjust their trade or their hedge accordingly. So let's talk about the other side, and arguably the more interesting side for us as retail traders, and that's when the smaller traders or electronic trading comes into place. So again, in this case, if I just wanted to buy 10 AMC calls through my E-Trade or IB account, most of you just put the order into your system, and then what happens is it goes out to the U.S. options exchanges and to market makers that are waiting to trade your order. And so there are only about 7 large market makers in the U.S. The big ones are Citadel, Susquehanna, Wolverine. And what happens is, again, you put an order in, and that order goes down to the exchange, and the market makers are required by the exchanges to provide liquidity. Recall back here, Bud Fox in this situation has the right to just say, hey, do you know what, Gordon, I'm not interested in buying your calls. I'm sorry, and he can hang up the phone. But the market makers are required. They get special privileges and they have licenses, but they're to trade on the exchange, but they're required to what's called provide liquidity. They always have to be there giving a bid and offer in every exchange. Now, they can offer a very poor bid or offer. They can widen the spread out, but they have to be there. So when you go and trade, the market maker is instantaneously short 10 calls. Now, the other interesting thing here is that Bud Fox in this situation, the broker, has the option of knowing that he's about to trade this order, right? As soon as he tells Gordon Gekko that he's going to trade, he can start to plan how he wants to hedge this thing. And he can also look at his current book, right? Maybe he already has a bunch of AMC positions on, and he can offset some of the risk in his bank's book. But the market maker, again, is suddenly going to find out that he's short, in this case, 10 calls, because I just randomly went in and bought calls. And so the dealer is short 10 calls, and as such has 500 shares of AMC to buy. So you look here and you say, okay, Brent, well, 500 shares of AMC is not very much, and I would agree with you, for one trade it's not very significant. However, imagine that we all went into a chat trading room like Wall Street Bets, and we all said, man, this looks great, let's all buy 10 AMC calls together. So you can imagine if we all did this right now, suddenly the amount of calls that could be purchased could be quite substantial, right? And the dealers have to react to that in real time, as they cannot take directional risk. So in this situation, if a whole bunch of small traders get together and they buy a whole bunch of AMC calls, in this case, you can see how quickly the number of shares that have to be bought or sold increases exponentially, right? And you could see, hopefully start to see now how the options order flow can impact the market. The other thing to note here is that in this situation with Bud Fox, he could arguably put his trade on at the same time, his hedge on at the same time the option print takes place. In other words, he doesn't have to alert the market to the fact that these calls were traded before he hedges himself. Whereas with the market makers, we can see that the option trade takes place first, and then suddenly the share hedges will pick up in the market. And you can see that the order flow, the way that it looks on our hero system, is quite a bit different. You can see that there's no big line here, right? Recall that when we were looking at this Las Vegas Sands trade, there was one big block print, right? But in this case, you're seeing dozens, if not hundreds, of very small trades enter the market. And you can see that in this case, this is NEO. The stock opens higher, and people are buying calls. We can tell, again, because they're positive delta trades, i.e. the line is going higher. People are selling puts. And then suddenly, as the stock peaks, traders start to rapidly sell calls and buy put options. And when traders are selling calls and buying puts, that's a negative delta trade, meaning that market makers and dealers have to start selling shares of stock. So again, you can see sort of in real time, obviously, this plays out. We'll look at the hero system quickly and show you in real time how a lot of this is playing out as well. There are a bunch of different instances in how this order flow plays out. Here is a very interesting system from our friends at the NASDAQ exchange. And what they allow us to do is they allow us to look into Tesla stock, and this is Tesla's stock price, and we can zoom to the millisecond. So as you can see here, we've zeroed in on this trade, and at 10:06 in Tesla, this is Tesla, this is this point right here, as the stock hits a low, you can see that there's a bunch of extra call selling here, but then note at this moment, all of a sudden at 10:06, somebody sells a whole bunch of put options, and those are positive delta trades. In theory, if someone sells a bunch of puts, dealers can buy back a short hedge, and you can see the stock pops here. But if you zoom into the millisecond, the exact time that this order hit the market, hit the options market, you can see at that exact time the stock reacts in kind, right? One could argue that if we were looking at a time frame over 5 or 10 minutes, that there could be a wealth of other factors involved. But when we're able to zoom to the millisecond to see where the option trade and then where the stock hedge took place, it's fairly obvious. It feels that there's a very strong link. And obviously, I'm not allowed to guarantee anything, but it's a very safe bet. I feel like to say that these two are very highly correlated. And so what we'll often look for is a change in this options flow at major gamma levels. And major gamma levels are, again, areas where there's a lot of open interest. And I wanted to switch to our dashboard here to show you some of that gamma trading flow, and maybe I can do that now. I don't think I had the chart that I wanted to show in here. Okay. So I'm gonna switch my browser briefly, so please stay with me, and I want to talk about some of the gamma hedging levels and key trading levels that we see. So this is our subscriber portal. Incidentally, if you go to subscribe now, you can get a free 7-day trial. And what we do here is we write a daily note. And the daily note, what it does is it outlines how we think this options hedging flow is going to impact the market, primarily the S&P 500 and the NASDAQ. And this is based on the open interest to start the day. So most of this note will center around the key gamma levels in the market. And what gamma levels are, just as we were talking before about how dealers and market makers need to make a decision, right, to hedge their book. We believe that these gamma levels become large support and resistance zones. And so if we give an example of where things are trading today, I'll show you our current gamma levels and just enter a brief discussion about how the market should react to these levels. So what we've shown here is for each strike in the S&P 500, and you can do this for the spiders or the Qs or individual stocks, you can see that there are two major strikes here where there's big lines. The positive lines here is gamma from call positions, and the negative bars here are gamma from put positions. And so what you can see is that at the 4,000 strike, there are very large call positions and put positions. And in theory, as the market moves up to this level, options dealer flow should increase. And we think that makes this a resistance or support line in the market. So in this case, we're looking at major resistance at 4,000 and major support at 3,900. And if now you look at the market, you can see that we're essentially positioned, this is the real-time trading in the S&P 500, we're essentially positioned squarely between this large 4,000 strike that I mentioned and above this 3,900 strike. And there are a bunch of other smaller strikes in between there as well, and that's what these other lines are. So C1 is what we call a combo strike. It's a little bit of a, I don't want to get off topic here, but these extra lines are also support and resistance levels based on gamma hedging. And again, the idea is that as the market approaches these levels, dealer hedging should increase, and that creates the support and resistance zones that we have been talking about. So if you were to look at the way that the market is lined up right now, if we go back to this portal, what we do is we create these pop-up windows, and these are all of our key support and resistance levels for the day. And some of them are well away from the market, but there are obviously a bunch in here that would come into play for the day. And so we have a lot of traders that will load these key hedging levels in. Again, you could just trade spiders or maybe the futures, and you'll want to watch how the market reacts to these big options levels. Because we believe, again, as the market approaches one of these key levels, dealer hedging flows will pick up, and that creates support and resistance lines. So for today, if I switched over to a quick chart of trading view, and we can just analyze the way that the market looks at the moment, hopefully we'll be able to get another view into this. So you can see that over the last several days, that 4,000 level that I mentioned has been a very large open interest level for some time. In this case, we had a very large options expiration on May 20th. And we talked about the fact that a lot of put options were expiring. And remember that chart that I started off with. And so a bunch of put options expired. And when put options expire, dealers who are, or in theory, short puts, they're no longer short puts, right? So if you're short puts as a dealer, you also have short stock as a hedge. And so suddenly when a bunch of put options expire, you no longer need those short hedges, and you can buy those hedges back. And that's what creates, again, some support and resistance. So you'll note right here is where the options expiration is, right? This is what this gap is here. And into that options expiration, there was a very big rally and subsequent rally on Monday, we believe, as more of those shorts were adjusted, right? As dealers cleaned up their hedge book, and that created the rally. So you can see again 4,000 as a major resistance point and 3,900 as support. And so if we combine the idea of these gamma-based support and resistance lines, and we look at the way that the hero flow is coming in, this is the real-time deltas trading, you start to be able to piece together a story of what's happening in the market. So in this case, you can see that at 2 p.m. we obviously had the FOMC minutes. And what appears to happen is this purple line, which is our delta reading, went higher. So that told us that traders were either buying calls or selling puts, and you can see that the market went up as well. But suddenly what happens right here at 2:30, traders changed their options positions, right? The deltas started to shift lower, and the only way that we can generate negative deltas is through selling calls or buying puts. And what's interesting to us about that is that you may know that the market has now stalled, and so we classify this as a divergence. And so when you see that the options market is no longer in sync with the way that the stock market is trading, we believe that dealers are going to now start shorting a little bit more as this line comes lower. Again, as this line goes lower, it implies that dealers have more shares to sell. If the line goes up, dealers have more shares to buy. So compare this divergence to something going on in GameStop, and you can see what we mean here. In this case, since the start of the open, really, as soon as the market opened, traders were entering into positive delta trades. They were buying call options and or selling put options, and you can see how quickly and violently the GameStop shares went up. Now, what you may note here is that as the stock moved into this area of 114, the hero signal flattens out, and that's telling us that the options flow is starting to tire, right? The options flow is now starting to exhaust, I would call it. That's what the line trading sideways is. And so that is less supportive of these higher prices in GameStop stock. So you can see again how by reading the options order flow, both on an intraday basis through Hero, or if you're looking at some of the key trading levels, et cetera, through our founders notes and the like, that you can start to piece together how the options market may be driving individual, not only individual stocks, but also the indices. One last thing I'll note is that we provide a lot of training content in all of the different pieces of our system. This is our Equity Hub, which is another one of our subscriber tools, but you can also run this analysis that we did on the S&P for any individual single stock, right? We give you key trading levels, how much options are expiring at various dates, and try to shine light on how that may impact the stock. So this is not simply an exercise for just the S&P and some active names like GameStop, but we measure over 3,000 different stocks on every single day. We do that for our members and for our subscribers. On that note, if you do have any questions, you can always send us an email, info@spotgamma.com. We have a YouTube channel which has a lot of educational resources on it. I'm also on Twitter @SpotGamma, and I'm happy to answer questions as well there. So I'm going to pause there and see if there are any questions. If there's anything I can answer, I'd be more than happy to help. Hey, Vincent, do I still have you there?
Yes, I'm here. Yeah.
Oh, sweet. Cool. So
can you explain how that trending, you can find candidates to that trending tool?
Yes. So what the trending tool is showing us is where is significant options order flow coming in for a given name. So GameStop obviously is having a lot of activity right now. The other name that's catching a lot of options activity is Coinbase, and you can see here that there's our big positive delta flow. So people are buying calls or selling puts in Coinbase, and so the trending is meant to alert traders to something big happening in a stock at this moment. That is what the goal of trending is. And so what this figure is telling you is if it's positive, that means a positive deltas, which means in theory that dealers would need to buy stock. And if it's a negative, it means that in theory dealers would need to be selling stock or selling the ETF. Now, the other thing that you can see here is in the center we have this hero signal column. The hero signal column is telling us relative to the last 5 days and last 30 days how big today's signal is. So for example, if you look at let's just pick another stock here, like again GameStop, we've been talking about that. So in AMC, for example, the entire width of this gauge, the gray gauge, is the hero signal, the most positive number and the most negative number over the last 30 days. And so AMC today is having its largest, most positive hero signal day over the last 30 days. So it's a very bullish call buying and or put selling in AMC for today. So this, by looking at this center gauge, you can see where there's big options activity taking place in a certain name. And then note that this colored area in the center is the high and low for the last 5 days. So I can scroll through and say, look, Boeing, there was a bunch of big call buying, significant call buying. I could tell it because this gauge is all the way to the right. Conversely, in Alibaba, it's very negative trading. And as you can see, this tells us that people are either selling calls or buying puts. And in accordance, Alibaba is pretty weak stock for the day. So the dashboard is meant to allow traders to quickly highlight interesting names, right, where there's big options order flow taking place, and then hopefully allow you to take action on that.
That's excellent information. Yeah, excellent. Or where they could find candidates every day to trade.
Yeah, and we find that there's where some of the best signals line up or where the intraday order flow, again, this delta trading that Hero shows, where that lines up with those gamma levels, right? Because if you know, for example, that there are these big big positions at 4,000, right, as we show here, then what we would look for is if the market trades into the 4,000 level, we would want to see negative delta trading coming into the market. In other words, we want to see this signal here, this hero signal, start to trade down as the S&P gets into and around the 4,000 level. So it looks like we're getting kind of close to testing that in a few minutes.
Yeah. How would you find a gamma squeeze? Like on which part of the section, like for like a candidate list?
Yeah.
In there from a subscriber on YouTube.
Yeah. So if you go to our equity hub, we set up a bunch of filters. And these filters look at all the open interest in a certain name, and they identify names where gamma is very prominent and set up for a squeeze. And so the most effective, we believe, positioning for gamma squeezes are having a lot of open interest at calls that are just slightly out of the money. And the reason is because if the stock starts to move higher, those calls which are out of the money start to pick up in value. They pick up in gamma, and that leads dealers to have to buy more and more shares of stock. So the gamma squeeze indicator here is a convenient way to look at names that have a decent amount of out-of-the-money call positions relative to how much stock volume there is, right? Because you want a big options position relative to stock. And so this can be a great screener to find some names that are set up for a nice squeeze. We also have this thing called the sandbox, which is some other names. So even if you're not looking for a gamma squeeze, but maybe you're looking for a name for a pin, or you're looking for a reversal in a name, different things like that, the sandbox highlights a bunch of names that offer other plays in addition to a gamma squeeze.
Awesome. Yeah, so you could say there, you could go to spotgamma.com and subscribe. And I believe that WSI 50, right? They could get 50% off to try the first month.
Yes, I believe that is absolutely correct. And so when you go into the subscribe now channel, there is a coupon code button, and we give a discount for your users here. You would just pop that code into the coupon when you go to checkout. So you would check out here, and then you would get a box that allowed you to put in your coupon code. And all of the
there's 3 different memberships, right?
That is correct. And all memberships come with a free 7-day trial. So we want you to try everything out. All of the subscriptions get our daily note. So we send out a note around 7 in the morning, just Eastern time, so that just before the market opens, and we describe the options set up in the S&P 500 and the NASDAQ. If you are only interested in that, you can sign up for Spot Gamma Standard. One of the nice things about the standard subscription is we provide links to a bunch of popular trading platforms. So you can pull hour levels into TradingView, or some of you maybe use NinjaTrader or Bookmap or something like that. If you're interested in equity trading, then you would want to use the Pro subscription. That allows you access to that equity hub tool where I was just showing you the gamma squeeze setups. And then Alpha gets you all of these other packages, but it also gets you access to the hero indicator. And again, you can easily upgrade or downgrade from positions, but you can try out Alpha and say, look, Hero's great, but I'm really only interested in trading the ES, so I want to just stick with standard. So we allow you to move between all the subscriptions, and we want you to try everything out first, right? If you don't like it, you can simply cancel and move along, but we think that 7-day trial will really prove its value pretty quickly.
All right, so we had a couple questions here. Say Misha says, can you screen the prices of shares which are below or above the minimum max gamma levels?
Yeah, so with the Equity Hub tool, there are all these filter buttons. And so that allows you to come in here and adjust the levels for what you want. So you could say, I want to show a key gamma is greater or less than a certain price, or above or below a certain price. So this allows you to set up your own screeners in a way. So that should help Misha get to explore some of the setups that's most interesting. So those filtering tools are all set up, and then there is some sorting and filtering available also on Hero, not necessarily from a price perspective, but you can set up a watch list. So if you set up a bunch of stocks here in the Equity Hub and say, I like to watch Apple, Tesla, Amazon, then you can come over into Hero and set up your own watch list. So in my case, I just have this set of 10 stocks in my watch list, as opposed to looking at all the various symbols individually. And someone brings up an interesting piece of information here, Ali, about using a specific call and put option. What's most interesting oftentimes from the perspective of these names is that when you have a situation like GameStop where the stock is running, right? If this call order flow, this positive delta order flow continues, then we generally think that the stock will continue to run. And how you want to express that trade, whether it's buying stock or buying calls, is kind of up to you. We have a lot of traders that will also simply wait and watch for the order flow to turn. So if this call flow and put flow turns negative, or it shuts off, that can often be a precursor to the stock fading, right? Obviously, in this case here, we see that the flow continues in one direction, but if this was to turn, meaning the purple line turns lower, that tells us that people are actually starting to sell calls or buy puts, and that could mean that a reversal is pending in the name. So that is oftentimes one of the more powerful ways we think to use the Hero indicator. It's not necessarily trying to ride a trend; it's waiting for the trend to end.
Yeah, saying that, and I think going to the question, like for example, like the SPY, that 400 level, you definitely want to be seeing when it hits the 400 level, what's that total, that purple line is doing when it's hitting that 400 level.
That's exactly right. And so if I was watching this level and I could see that call buyers and put sellers, and I could break that out just to be specific. So now we have puts in blue and calls in orange. If I wanted to short the 4,000 or 400 level as the market is sort of approaching it, if this Hero flow turns south, right? If it goes to negative, that gives me more confidence to want to short that move or short that play, right? In this case, it looks like the options market is not doing much as the stock market is shifting higher. And so you maybe don't want to be as aggressive trying to short that move, right? Or, right now, if you look at the S&P, we're at 3980, you could say, okay, this may mean that there's more room to run, right, for the stock, because the options market is not interested in basically shorting this move at this time.
Yeah, if you see it continue going up, it could show that it could break that 400, and a big move could occur either way from that 400 level.
Right. So if you wanted to short, you could say, well, maybe now is not the right time because the options flow hasn't turned negative. Or if you wanted to hold along, right, maybe it's a good reason to keep holding along because, look, I own spiders at the moment. I think the stock's going to go. I think spiders are going to continue running higher, and the options market, is trending higher with me. So that gives me more confidence to hold, my long position, for example.
Excellent information. Thank you for being on here, Brent.
Absolutely. I really appreciate the opportunity to talk to you all. Again, I love talking about markets, so you can reach me at SpotGamma on Twitter. There's a whole bunch of videos which cover really all of these different aspects in more detail on YouTube, so you can find more information here in terms of educational videos and the like. And then, of course, info@spotgamma.com if you have any
and the YouTube channel, they just go to Spot Gamma, and you can see a lot of videos.
Yeah, that's right. It's YouTube, YouTube / Spot Gamma. So I know I probably spoke a little bit too quickly through some of these pieces. So if you feel like maybe I skipped over a few things, you can go here and you can see that there are tons of different videos that cover every aspect of the market. Interesting trade setups, how the market moves around, OPEX. One of the things to note too is we do have an option-specific course. So if you go to academy.spotgamma.com, there's a very nice course that we've lined out that takes you everything through what is a put and call all the way up to advanced things like volatility trading and the like.
Awesome. And Brett's going to be in the masterclass on Friday. So everyone who signs up will also be there. We're going to be showing some trades there on Friday, and some more key tips on the how to use spot gamma to find great trades on our masterclass.
Yeah, and I'm looking forward to that. And so, feel free to bring a bunch of questions, and I'll be happy to answer them.
All right. Thank you. Have a great afternoon, everybody. Thank you for being on board. Thank you, Brent.
Yeah.
And we'll see you guys on Friday.
Yep. Thanks, everyone, for your time, and have a great afternoon.
Great afternoon. Take care, guys.